Welcome back, everyone. Let's dive straight into today's market action and get up to speed on what's happening with Lucid Motors and the EV market as a whole. Lucid stock took a hit today, sliding by 4.06%. The stock opened with some initial momentum, trading between a low of $3.03 and a high of $3.23. Early in the session, we witnessed some notable transactions in the secondary market, with three large trades exceeding $100K, one at $127K, another at $182K, and a third at $125K. While this might sound promising, it was not enough to set the tone for the day. Despite these early purchases, the overall buying pressure from institutional investors, commonly referred to as big money, was absent. The day quickly turned into a sell-off, with the market painted in red across the board. This widespread decline can be attributed to several factors, including profit-taking, year-end tax strategies, and algorithmic trading activity amplifying the downturn. It's essential to note that there was no significant news, regulatory filings, or company-specific announcements related to Lucid that could explain the drop. Instead, the decline seemed to be a reaction to broader market movements, combined with increased short-selling activity. Let's talk about short interest because it's a significant factor impacting Lucid's performance. Today, the number of shares shorted increased by 95K, bringing the total to 22.39% of the free float, equivalent to approximately 266.77 million shares. This heightened short interest suggests that bearish sentiment toward Lucid is growing. Why is this happening? Well, Tesla is set to release its Q4 numbers this week, and historically, Tesla's performance and updates have a ripple effect across the EV sector. Many short sellers are likely positioning themselves for potential market shifts that could stem from Tesla's data. Keep an eye on this, as the numbers Tesla unveils will likely influence not just Lucid, but other EV stocks as well. Interestingly, short seller activity seemed to pick up last Friday, not just for Lucid but across the board. This trend could continue throughout the week, so expect some volatility ahead. Additionally, we have key manufacturing data scheduled for release on Friday, which could further impact the market. Now, shifting gears, let's discuss something intriguing: Lucid's partnership with SoundHound AI. At the CES event, SoundHound is showcasing its AI technology, and Lucid Air is featured in their demonstration. This partnership highlights the integration of SoundHound's chat AI into Lucid vehicles, showcasing its capabilities in a real-world automotive setting. For those unfamiliar, Lucid previously used Alexa as its voice assistant. However, with the recent 2.4 software update rolled out about a month or so ago, a new voice assistant was introduced, one that wasn't Alexa. It turns out this new assistant is powered by SoundHound. This partnership had not been publicly disclosed, making it a surprising development for investors. While this collaboration might not be a compelling reason to buy Lucid stock outright, it does reflect positively on Lucid's commitment to enhancing customer satisfaction. For SoundHound, this partnership is a significant win, as it demonstrates the applicability of their technology in high-end electric vehicles. Interestingly, neither company has formally announced this partnership. It's possible they're waiting for the right moment to make an official statement. In the meantime, seeing Lucid Air featured at the CES event under the SoundHound booth is an excellent marketing move for both brands. Looking at today's options activity, we saw a total of 535K call options and 194K put options traded. Of these, 56% were bearish, reflecting the cautious sentiment among traders. Among the call options, there's still optimism for Lucid stock to rise above $3.50, although the frequency of these trades has diminished. On the bearish side, some traders are predicting the stock could fall below $2 by January and even $1.50 by mid-2025. Let's examine Lucid's technical setup. The stock is currently trading between a strong support level at $3.01 and resistance points at $3.19 and $3.37. If the support at $3.01 fails to hold, we could see the stock drop to $2.90 or even $2.72. On the flip side, if the stock manages to regain momentum, breaking past $3.19 could pave the way for a move toward $3.37. However, given the rapid pace of Lucid's recent price movements, expect significant volatility in the near term. Currently, the stock is trading below its Alma Anord Legu moving average, signaling a bearish trend. Additionally, the 10-day and 200-day moving averages are tightly grouped at $2.91 and $2.97, respectively, which could act as short-term support levels. As mentioned earlier, Tesla's upcoming Q4 results will be a focal point for the entire EV sector. For Lucid, we're expecting Q4 updates around the third week of January, although the company is known for being unpredictable with its timelines. It's also worth noting that Lucid is not participating in this year's CES event in the traditional sense. Historically, Lucid has been an active participant, so their absence this year is somewhat surprising. Instead, their presence is tied to SoundHound's booth, which raises questions about their strategy. To sum it up, today's decline in Lucid stock reflects a combination of profit-taking, tax-loss selling, and broader market conditions. The lack of significant buying from institutional investors and the increase in short-selling activity have added to the volatility. Looking ahead, keep an eye on Tesla's Q4 results and the manufacturing data set to be released on Friday. These data points will likely influence Lucid's performance and the broader EV market. On a more optimistic note, the partnership with SoundHound showcases Lucid's commitment to innovation and customer satisfaction. While it might not be a game changer for the stock, it's a step in the right direction. If you found this video helpful, please give it a thumbs up and consider subscribing to the channel. Your support helps us continue to bring you in-depth market analysis. Thanks for watching, and I'll see you in the next video. Take care.